Hi everybody, this is Ellman, the Blue Collar Investor, and welcome to another one of my videos, this one entitled The VIX and Your Covered Call Decisions. Now the VIX is just another one of our tools that we use in helping make determinations for our investment decisions. So let's start by explaining what exactly is the VIX. Well, this is the ticker symbol for the CBOE, the Chicago Board of Options Exchange Volatility Index. It's also known as the Investor Fear Gauge because it lets us know the general market consensus as to the volatility of the market that investors are expecting in the near term. So it actually is the implied or expected volatility over the next 30 days. So how exactly is the VIX calculated? Well, it uses a wide range of the S&P 500 index options. So this is a very good broad look at the general market because it tracks the S&P 500. It uses both put and call options. And because it's looking at the implied volatility or the expected volatility, it's actually forward-looking. Now there are some tracking variations of the VIX. The VIX, as I said, tracks the S&P 500. There's also the VXN, which tracks the NASDAQ 100, which are 100 of the largest non-financial companies on the NASDAQ exchange. And we also have the VXD, which tracks the Dow Jones Industrial Average, or the Dow 30. We're going to concentrate on the VIX because it gives us a much broader view of the general market. The most important thing that we need to know is that most of the time the VIX has an inverse or opposite relationship with the S&P 500. So a declining VIX or a calming of the market or a stable VIX under 30 is a bullish signal, and we should treat our investments in that regard. An ascending VIX, or one heading to the moon, particularly if it's going up rapidly, is a very bearish signal, and we need to take more caution with our investments. Here's a chart I constructed showing this inverse relationship. Where you see the red arrows, you see that the VIX, the blue line on the bottom, is going down, and the S&P 500 is going up. Once again, showing the inverse or opposite relationship of these two parameters. Where I constructed the blue arrows, we see the opposite. We see the VIX going up and the S&P 500 going down. Once again, demonstrating this inverse relationship. So let's evaluate in conclusion how we would use this VIX in our investment decisions. First, we have to recognize that this is one factor that we use in determining market tone. I like to use the VIX, the chart of the S&P 500, and many of the near-term economic reports that come out weekly. In my blog articles, I always finish with market tone, where I'll discuss charts of the S&P 500, the VIX, and the recent reports that were published the week before the blog article is written. We could use the VIX to help determine our strike selection. For example, if we have a very favorable VIX, along with other of the tools that we use, we might opt for an out-of-the-money strike as opposed to an in-the-money strike. And the opposite would hold true. If we have an unfavorable or bearish VIX, we might want the additional protection of an in-the-money strike. It can also help us with our exit strategies. For example, on expiration Friday, if we're going to do a rolling strategy and the VIX is very bullish, we might opt to roll out and up, a much more bullish approach than simply rolling out. And of course, the most important thing that we need to know, and I stress this in all the videos, my books, my DVDs, is that we don't use any one tool to make our determinations. We use it with the other blue-collar investor fundamental, technical, and common sense tools. But the VIX is a very, very important parameter we need to look at when making our investment decisions. So I thank you all for watching this video. You can contact me directly if you have any questions at alan@thebluecollarinvestor.com, or visit my website, thebluecollarinvestor.com, where I have a lot of very free information, other videos, and historically 3 years of articles that I've published, much of which has very useful information in helping you make your investment decisions. So thanks again for watching. I look forward to hearing from you. Take care, everybody.